Hello.
Hello, bro.
Hi, good evening. How are you doing?
Good evening, Chia. How are you doing? How is everything?
All good, thank you.
Nice. Okay, how was the day?
The day was
How has
good.
been the day?
Yeah, very good. Okay.
Yeah,
How
okay.
was your day?
Not bad. Okay, let's get started.
Yeah.
Okay, I know you are used to you are used to storyline. You understand?
Yes. Yeah.
Okay. I think we're gonna just talk about how to get entries on
Mm-hmm.
certain trades.
Yeah.
Mm. Okay, let me clear the chat. Mm, Okay, now
Mm-hmm.
when it comes to getting entries, you always start from the weekly.
Yeah.
Then from the weekly, you will go to the daily. Then from the daily, you go to H4 till H1.
Mm-hmm.
Then if you understand all the time frame, then you go to lower time frames for at least to get some setups.
Yeah.
For example, here, let's start from the weekly. Okay, let's frame today's trade.
Okay.
How how it was and how it moved.
Mm-hmm.
Now, when you try to see here, you see that, okay, last week we had weekly rejecting weekly. Are you seeing where it rejected?
Yes, weekly rejected. Yeah.
I call it weekly support.
Mm-hmm.
Then we put an horizontal line.
Yeah.
Uh, then from there, what we do, we
Mm-hmm.
drop to the daily. When we go to the daily, we need to find an external breakout.
Mm-hmm.
So these breakouts are easily seen on the line chart. You can see this is the high that was created before the rejection. Then the market came and took it out.
Yes. Yeah.
We mark it as a
Mm-hmm.
breakout. Then after we marking that as a breakout, meaning it's a structural break.
Mm-hmm.
Uh, then from there, you go back to the candlestick chart and see. Now you can see that, okay, last week
Mm-hmm.
we created this new SNR level. Keep
Mm-hmm.
in mind that this is not there. The recent candle that is forming. Keep in mind that it is not there.
Right.
Then we created a new daily level that we
Mm.
expect the market to at least reject from. Then we go with the source depending on the market conditions. So
Right.
we mark this one after daily.
Mm-hmm.
Then you can see that last week we rejected from this area.
Mm.
We rejected from here, meaning we had daily rejecting daily
Mm-hmm.
from here, daily rejected daily. Then what we do, we go to
Which one is the
H4.
daily rejected daily? Can you mark that?
Okay.
Mm.
Are you seeing this area?
Yeah. True. Yes.
Yes, we
That
had
was rejected.
this.
Yeah. Yeah.
It was a support break.
Mm-hmm.
It became a resistance level.
Yes.
Hmm?
Mm-hmm.
Yeah, support break became resistance. Then
Resistance.
we
Yeah.
expect
Rejection and then
the
you break. Yeah. Okay.
yes, they rejected again. They break it, meaning it became a rejection. What it became
Resistance.
a support, a resistance. Then after a while, they broke it,
Mm-hmm.
meaning or it was RBS at first. Now it
Mm.
became a support level.
Right.
Then you can see that the market rejected from here.
Yeah. It became
After
support
it
there. Yeah.
rejecting,
Okay.
yes.
Yeah.
After rejecting it, we go to H4 and see did we have any breakout.
Mm.
Then you can see that, okay, this is where the market, uh, that's where the market touched that line.
Mm.
Then we go to the line chart and look for an external breakout that happened before the rejection.
Mm.
We can see that, okay, we had this
Mm.
structural break,
Mm-hmm.
confirming that, okay, the
Mm.
daily also is bullish, meaning the weekly is bullish, daily is bullish. Of course, even the H4, I think it's bullish.
Yeah.
So this is a structural break.
Mm-hmm.
Uh, then from there,
Mm.
this one is BR.
Mm-hmm.
Then from there, what we do is start framing our trades. For example, today is a Monday.
Yeah.
Now, if today is a Monday, we need to find a trade opportunity on Monday. We all know that all the time frames are bullish.
Yeah.
Now they created this new support resistance level. Then what we do, we come to H4 and see how H4 is creating its price action. You can see that here when you come to H4, we had this gap, meaning it was a support.
Yeah.
Then after that, the market rejected from it.
Yes.
Are you seeing the market rejected from
weak,
it, giving us
yeah.
giving us buys? Now, today is a Monday. The market opened here. Now, how are we going to get either sell opportunities or buy opportunities? We can all see that we had this level that was created. It was the only nearest fresh SNL level that was created before
this open, yeah.
Before London opened. This was the only level that was created. Then we mark it as H4 because it's on H4 chart. This is H4 level. Then from there, what else do we have? We have this extreme fresh SNR level.
Yeah.
It's also H4. Remember, we are just framing a trade. Then from there, what we do, we can see that, okay, the market reacted from that level during the Asian range. Then after, again, the market created another SNR level here.
Okay. Yeah.
It has created another SNR level there, meaning it's H4. H4. Then from there, you go to 1 hour and start refining. On 1 hour, what do you have? On the 1 hour, we can see that, okay, we had this SNR
When did
level.
the market open? Can we draw this is the horizontal, the vertical line is that, the market open, huh? That
This
one. The dotted line is when did the market open?
Yes, it was when it opened.
Okay.
Then from there, this was the Asia. Let me mark it for you. Because you don't go during Asia. No. These two candles. Okay, that was Asia. Let's go to 1 hour and see. Asia. Yes, that was Asia.
Okay.
Then from there, what do we have? We have this. We can refine this level. This was the newly created SNR level. We can refine it to here. Are you seeing where the market rejected? Meaning this is H4, H1 refinement.
Asia level was Asia was over when? And London Open is when?
London Open. London Open is at 1.
Okay,
my
so
time 1. London Open is here.
Right.
Yeah.
So when the London opens, after the first bar, it's a new support which is created, right?
Yes, it was a new support created.
Okay.
Then from there, what we do, you can see that, okay, we refined this to this, but this happened.
No, even what I'm saying is even before that, there was a support created, no?
Yes, it was a support created, this one.
That one, okay, and the one below also, yeah.
Yeah. Then remember, when London, during London, we didn't have these candles. We didn't have these candles.
Okay. Yeah.
So this was the level that we were waiting for H4 to come and reject from.
Right. Yeah.
Then we had this level too.
Yes.
We had this level too. This one.
Yeah, you're right.
Then from there, you go to H1. No, you go to either M30 and start looking for your key level. Right. Are you seeing?
So we have those two levels, yeah? Okay, that was created before London. Yes. Okay, yeah.
Yes, we had these two levels, but everyone is planning to buy from those levels.
Right. Yeah.
Meaning the market is most likely to take them out, then we continue with our buys.
Okay.
Are you getting?
Yeah.
So what you do is start marking your key levels. You can go either to the line chart and start marking your key level. Are you seeing we have this QM?
Yes.
Then, we had that level. You can see it was a support level. Then the market came and at least triggered, took them out from that level. It gave them buys. Then I think they set break even. Then the market retraced and took them out. After taking them out, I then started buying. For us, what we do, we mark all those key levels and see. Now, if the level is created, if we have key levels near Asian low, what we do, we shall mark Asian low as liquidity. This one.
Okay.
Because the market is most likely to liquidate that area.
Okay.
We mark the Asian low as liquidity. Then from there, what we have these two SNL levels, these two SNL levels.
Yes. Yeah.
Now, remember, I told you that the best area for you to buy from is an area with an engulfing candle.
Yes.
Are you getting?
Mm-hmm.
Then let's go back to the candlestick chart. Are you seeing that this area had an engulfing candle? It had an engulfing candle.
Yes.
This one was a QM, meaning this one was a left shoulder.
Yeah.
Meaning these levels were all on M30.
Right.
M30.
That was the left shoulder. Yeah, you're right. Yeah.
Yeah, it was a left shoulder. Then what you do whenever you have two levels, remember our entry, our SL is always 30 pips.
30 pips, yeah.
SL. Yeah. Then from there, your first entry is at this area. You put your limit order.
After immediately after the Asia, right? Which is the first engulfing candle, or after the engulfing candle? When do we buy?
Yeah, after Asia, Asia being taken out, then we shall get our trades. You can see that, okay, this trade happened during London kill zone from 1 to 2. Are you seeing?
Yes.
Up to here. It happened during London kill zone.
Kill zone, okay.
Then if the market might also give you another opportunity to enter.
So if we had entered here, we would have exited.
Yes, would have the market could have came back and give you a re-entry.
Okay, fine.
After giving you a re-entry, then you will continue with the buys.
Okay.
Okay, then we got also this trade. I discussed this trade when we were in the live stream with other students.
Okay.
This was New York Open.
Which one? Okay.
8. It was 8. This one was New York Open. Now, here when you try to see on the line chart, do we have an SNL key level? You can see that, okay, we had this level.
Yes.
We had this level too. We had this level too. Which one is most likely to hold the market? Let's go back to the candlestick chart.
The left shoulder, kind of, yeah.
Then when you try to realize here, you will see that, okay, this was a QM pattern. You can see that we had this one as a left shoulder. Are you seeing it's a QM?
Yes, yeah.
Imagine the market reacted from it. Then we had this one as this one. Do you know what they all right shoulder? Have you ever looked about it? Because there is what we call EMA, right shoulder.
No.
Meaning this level was created during London, and the market didn't come and react from it.
Okay.
Then from there, we start looking for entry. Then we apply our rule that, okay, the best area for us to get trades is the area with an engulfing. Okay. Are you getting?
Yes.
As you can see here, we had an engulfing. Are you seeing?
Yeah.
Then it was H4. It was H4 refinement in the same area. It was H4 refinement. If it was H4 refinement, meaning this area is most likely to hold the market, and that is the last zone that we have. Then you set your limit order here.
No, I didn't follow on the. So what is the? I mean, we said we will use the engulfing, right? So where did we mark the engulfing, and how did we take the entry? We use the engulfing in which time frame? In 4 hours or 30 minutes or?
Are you seeing this one? This one is in M30, but it's like a doji candle. It's like a doji candle. Let's try to check on M15.
Yeah.
Are you seeing M15?
Yeah.
This is the zone that we marked. Then let's see on H1.
Mm-hmm.
Are you seeing that they are all giving you the same?
Right.
You can
No,
see
you
that
talked about the
this one.
engulfing, right? So I just wanted to see
Yes.
that, I mean, how it's relevant.
Always, have you ever traded SMC? Have you ever traded SMC?
No.
No. There is what we call order blocks.
Okay.
If
yeah,
you
order
know
blocks
what
I know. Yeah. Okay. Yeah, I know order blocks, fair value gaps,
they are
those
the
things.
same
Yeah.
as they are the same as engulfing candles.
Okay. No, but I didn't see when you said we will take the trade here, I didn't see any marking based on an engulfing. That's why I was a bit kind of confused.
Oh, it's here. Let me try to do it. Are you seeing this candle? This one?
Yes. It's kind of a doji kind of
Yeah,
thing. Yeah.
that's what is kind of a doji. Meaning
Yeah.
it's it does that traders supply and demand,
Mm-hmm.
something like that. It's the same story.
Okay.
So when you are trading, by the way, this way, entries, whatever entry type that you know will
Yeah.
always work.
Mm-hmm.
Yeah. Then from there, you can set your limit. From here, your TP, you go 1 to 4, 30 pips, 120. Just take a profit. You can see the market gave you take a profit, and I had that trade. Then if the market left you, they created this new SNR level.
Yeah.
Then if you get a retracement to that level, you just still enter from there. Now today traded, you had 3 entries.
Yeah.
But for me, I got only these 2 entries. Then for this one, for me, my target was on H4.
Okay.
Because on H4, are you seeing? Okay, my target was on H4. It was about 150 pips.
Okay.
Yeah, 150 pips. Then you could have also catched these cells.
Okay.
How could you have got those cells? Let me clear the chart.
Okay.
And remove some drawings from there. Okay, then you can see that, okay, this was H4 zone. If you go to H4, this is H4, okay. This was an H4 zone level. Remember, today is a Monday. We need to frame how the trade gonna react, or how can we get some trades. As you can see, the market traded to this last H4 fresh SNR level.
Yes.
Then from there, we go to H1 for more refinements and see how the market is communicating to us.
Right.
So on H4, we had no refinement level.
Yeah.
So if we had no refinement level from that area, we just go either to M30 and see how M30 is also communicating to us. On M30, we can see that, okay, we had here an engulfing, but the market reacted from it. Let's go to M15 and see how could we have catched a trade from those zones. Now,
there is one here.
Now, are you seeing?
Yeah,
Here
there's a fresh zone, fresh
M15,
resistance. Yeah.
Remember, I told you the best areas to enter that trade from is areas with engulfing candles.
Yes.
Are you seeing that we had this engulfing candle? Then when we had that engulfing candle, meaning this area could work as liquidity. This one. Liquidity. You need to apply other confluences in order for you to claim a good trade. This was our liquidity zone. Then we had an engulfing candle to support our sales. Remember, I told you that, okay, your first limit would be set there, then your second limit could be set at that line. You set your limit there, your SL 30 pips, then take a profit, 120 pips. As you can see, this our stop loss covered these two zones, then you are good to go. You can see that price.
Okay, so at this, yeah. So now when you take the short there, you don't go down to 5 minutes or something. You just take the entry based on 15 minutes.
No, yes, you can just take the entries based on the 15 minutes. If you get
you
your
don't wait
level
for
to
a
sell
pattern. You don't wait for a pattern to unfold at that entry, or just like that. If it hits the level, you take a shot, or
you take a shot, but it depends on someone, because other traders will go to M15. Let's say we go to M15. They wait for the market to create an engulfing. As you can see that, okay, here they created an engulfing. This one, then they could have just entered from there, and you can see still they got an entry. Then others, we just wait for the break. Others, we just wait for the break that, okay, they have broken here. Then for the pullback to the extreme, then they enter.
Okay.
Right? But okay, if we had a break here, then they could have entered from somewhere here or here, depending on the style of trading that you
Okay.
That's why I tell you that every entry pattern will work if you know the right stuff. Then but for me, most of the times I end from M15.
Okay.
Then still, let me try to see. Okay, then you can see that, okay, here the market is still selling. Why is it selling? The market created this engulfing, then we had this extreme level. The market has just reacted from those two levels. But this couldn't be a higher probable trade to me. Reason, I could be trading against the trend. So it's not a higher probable trade to me. It can hit TP, but it's not a higher probable.
Okay.
So meaning this was it's a higher risk entry. You risk accordingly. So then when it moves 50 pips, you set break even, or you take partials and set break even. Yeah, but if someone is trading to that, then could exit from that low.
Got it.
Are you getting? Yeah. What else can we look at? As if I had a trade on. I had a trade on GBP JPY.
Okay.
GBP JPY. Let me try to see.
Right.
I entered it last week. This target is 500 pips. Yeah, 500 pips. From there, what you do, you go to the weekly and see. Like here, you see weekly rejected weekly. It rejected from here. From here.
Well, yeah.
Then you go.
Yeah.
You go to the daily and see a breakout. On the daily, do we have a breakout? If you're trading this week, this is what you could be doing. You can see that, okay, here the market gave you a bullish breakout. Today is a Monday. Where do you expect the market to trade from? It can either react from the nearest daily SNR level, or it can react from the nearest weekly SNR level. Then we'll start marking our key levels.
Okay.
On the weekly, what do we have? We had this level. Let me make it red as weekly level. No, let me make it black. We had that, then we had this, and was this one also a level?
Yeah.
No, this one isn't a level. Yeah, those are the two levels that I could have marked. Then from there, you go to the daily and you also mark the nearest daily levels. Here, this was a weekly level. Then you can see that, okay, on the daily, we had this level.
Yeah.
We had that level and we had this level too. Now, you can see that, okay, the market is currently rejecting from the last level. When you go to the line chart, you can see that, okay, this could be the best level to buy from.
Yes.
Reason, we broke it. It was a structural break. Then, yeah, something like that. You start framing your trades. Then from here, you go to the you go to H1 and see, are you going to, do we have any level for refinement or not? Let me put this one here. On H1, what do we have? Okay, let me get another chart. GBP, JPY. Clear the chart. Okay, we are using Rwanda. Let's start from the daily. How is this broker printing these candles? You can see that, okay, that was the level, and we had this one too as the level. Then the market is currently reacting from the downer level. You go to H4 and see, do you have any zone of refinement? As you can see, this was the level. Okay, the market rejected from here. You could have refined this to here, to here. Remember, you were just framing a trade.
Yeah.
Then from there, what you do, you wait for Asian range to finish forming. Then you execute your trades. You go either to M30 or M15. As you can see, on this is M30. The market reacted from here. It reacted from here during Asian range, meaning most of the traders were not trading. So what we do, we start framing our trades during the New York Open. Then from there,
Not
what
London?
do we have?
Not London, huh?
Yes? Not London. Sorry.
Yeah.
Sorry, it's London.
Okay.
Then we start framing our trades. You can see that, okay, we had this level. Most of the traders were planning to sell from there. Then, unfortunately, they took them out. After taking them out, then for us, we shall enter the market. Or if you had this one as we have this one too as your key level, you can see that, okay, the market reacted from there for the sales. I think it reacted from there for the sales. They gave them few pips. Again, they came and took them out at break even. Are you seeing?
Yeah.
They took them out from there. Then from there, what do we have for us? We shall just wait for the market to come and react on that zone. Then we enter. Let's go back to the candlestick chart and see. As you can see, are you seeing how the market reacted from those two zones?
Yes. Yeah. They trapped the sellers there.
They trapped all the sellers.
Yeah.
Then I told you that the best areas to get your entry setups are the areas with engulfing candles.
Yes.
Now, here when you try to see, we had no engulfing candle on our key zone. Are you seeing?
Yeah.
Instead you just drop to M15 and see. We have an engulfing at those zones. Then if you see, you enter. You set your limits there. Now, on M15, what do you see? You can see that, okay, on this last level, we had an engulfing here.
Yes, yeah.
We had an engulfing here. Then you could have also refined your level to this downer level, this one.
Yeah, two levels.
If you want to refine. You could have refined it to there, then you could have just entered from here.
So
during London.
Yeah. So how many pips? How many pips stop loss for this?
For this, sometimes I risk 20.
Okay.
But you could have also used the 15 pips
Okay.
SL. But this pair is volatile. That's why I use 20 pips SL.
Okay.
Then you could have entered from there. And I had this trade in the morning, but I was not. Since I entered the swing buys, I entered this on intraday account. Then my take profit was at this high.
Okay.
Something like 40 pips. Then my final take profit is around here. Yeah, around there. Around there. By this way, I can also give you 100 pips a day. Let's see how many pips. Yeah, it has already given you 100 pips a day.
Here's 100, yeah.
It's good. It can give you 100 pips every day. Whenever you get a setup, it can move for 100 pips.
Oh.
So are you seeing, even though you used the 10 pips, you were safe on this trade? So sometimes you place a stop loss depending on the quality of setup that you have.
Right.
Is there any question?
No. No questions so far.
Okay. Then I think that is it. The reason as to why sometimes I don't want to teach these many entry patterns is that sometimes you get confused. Because someone told you that, okay, you must enter on EPEX, RBS, then left shoulder. So what you do, you just mark your key levels. You enter on key levels. Are you getting? Then from key levels, you try to look for an engulfing candle. Yeah, if you find it on your key level, you just enter.
Very good.
Just like here, we had an engulfing on our key level.
Yes.
We just enter from there. So no need of complicating about entries. Yeah. Are you seeing? You could have just entered from there. This one I mark it as support. Yeah. That is it, bro.
Yeah, just 1 minute. Let me stop the recording. Okay, just hold on here, please. Okay.